Oh, dollar-wise? Yeah. Just seems like, you know, they set out to do something kind of unique. Hey, only my fans can come watch me cook something or watch me play golf. And then typical humans, we took it down the wrong road. But I bet they're not complaining. They got those dollar signs wrapped up there. So whatever you guys want to put on here. Yeah, and that's one of those where you can walk by like the people that made that company. You in Circle K getting a drink. The guy next to you has got all this money. You have no idea that's the guy or girl that put it together. That's the way to go, man. I mean, I don't know for sure. All right, we ready. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? I had this Larry King thing going on a minute ago. I was just sitting there like this. Remember Larry King? Anybody? The older guy with the suspenders? We're going to talk about the market today. Hey, before I talk about the market, I'd like to say thanks to Tim. Old Tim, one of our clients, came by and coincidentally brought us a bottle of wine from the Chateau Elan, which happened to be, I made a note from Jazz email about it about a trip I took to Chateau Elan on a discount. And really cool place, man, actually. So he stopped by the office today, brought us some Cabernet, some Chateau Elan Cabernet. It is good. I've had it. So we'll be enjoying that on some Wine and Wealth and maybe a few others around the office. If you're ever in the area, you want to stop by and say hi. Apparently, you know, there's no COVID in Florida, apparently. So you're welcome to come hang out. And that'll get the chat fired up, start this thing, huh? There we go. In the meantime, let's talk about the markets because that's really what we're here to do. So today was just Monday, right? Does that make sense? Or not Monday. This was yesterday. It was the exact replica in terms of what happened. Meaning you have the S&P, sure, it was lower, but the exact area of the S&P was lower, just like it was the other day, yesterday. I'll quit saying that now. So let's take a look. So here you got the S&P pulling back. Everybody's going to look at the 200-day moving average, this pullback after a massive run. Very normal. It's very fine that it's pulling back. I think everybody and their mother was saying, like, this is kind of crazy here. But the catch is, like, where do we go from here, right? So the market's very short-term memory. So it's always saying, I see what happened, but what happens next? I see what happens tomorrow, but what happens next? You know, you do the same thing. The risk is to the downside, and I'm going to be a little bit negative today. I don't mean to be negative today, but there's a lot of risk to the downside, and I think the big analysts, Morgan Stanley, Goldman Sachs, and even Bank of America's analysts, are all starting to get the gist of it. They've all made the comment that's basically the same. The market's going up, but in this rare case, the market's going up, and so is the risk. The economic numbers out there, which are boring, but I'm going to go over a few here for you today, they're not looking good. And so how do you define what you're going to do at this point? I think it's, again, sit on your hands, look for opportunity, look for discounts if there's something you've been looking to scoop up. But by no means is this an area where you could confidently say, to the moon, baby. That's where the market's going. That's what the kids say these days, in case you're not sure there. You got sentiment, all-time lows. Rates doubling. Interest rates doubling. The Fed's saying again today, we're going to do whatever it takes to lower inflation. They're going to shrink their balance sheet, which in reality is they're going to actually let their bonds mature. They're not going to be selling bonds out there. I think that gets misunderstood a little bit. You got the war, you got inflation, you got issues from the mortgage moratorium. We'll talk about that in a second. But if you look around the S&P today, what you're going to see, just like I mentioned a minute ago, you got Microsoft. Again, lower on the day, one of the biggest contributors to the S&P. One of the other biggest contributors is Apple. That was also lower. You can't have a market rally without these guys here. Nvidia, Alphabet, we do it every day, right? Amazon down 3%. As well, Tesla down 4%. These are the big dogs in the market. They shift they shift the weight of the market based on what they do. Now, if you look around, just put this wine off to the side for a second. You can look at Reits. You got Reits moving higher. American Tower is one of them there. Crown Castle is another one. All looking nice and strong. Everybody loves the Realty Income, ticker symbol O, for the high dividend there. Consumer Staples, Philip Morris, hi, looking good. Procter & Gamble, hey, that's not too bad. Walmart, wow, new highs, that's pretty cool. So that area looking sharp. I'll just point out some stocks over in healthcare. I mentioned that yesterday. You could see it waking up a little bit, and it's not overbought. Johnson & Johnson, that's a great day. Pfizer, not too bad there itself. Merck, also looking good and has been looking good. United Healthcare, wow, why is the market lower? I just don't understand this. And just pick your spot, right? CVX a little bit higher, right? That wasn't crazy. Energy wasn't the big exciting area today. You got EOG Resources higher, Exxon Mobil up 1% as well. Where do you want to look? You want to look at insurers again? Hey, Progressive had a good day, and this weird Synchrony Financial. Let's go to financials. Wow, it's even trying to come off the lows here. Allstate, wow. Hey, look at that. So notice that we looked at 5 stocks that had a rough day, and there were others: Visa, MasterCard, Facebook, and QCOM Semiconductors, right? But we look at a handful of stocks that control most or the biggest chunk of the market, and then we look at all these other stocks: Verizon, AT&T, T-Mobile, MetLife, Aflac, Arthur, AON, CME Group. Hey, all right. Right, so Lockheed Martin, all these stocks are higher. Sherwin-Williams. But it can't move the markets higher. That's one of the reasons why you say the risk is to the downside here, because even if those stocks start to give you a little bounce, now you know the type of bounce that they have to give you to move the broad market higher, right? So that's where we stand here at the moment. If we look over at the Nasdaq, down 2% on the day. Now you know why. It's all those 4-letter symbols that I just mentioned a minute ago. It used to be back in the day that the Nasdaq was the 4-letter symbols and the New York Stock Exchange was the 3- and 2-letter symbols. Now not so much, but generally speaking, if you were to say Microsoft, you could assume that that's a Nasdaq stock for the most part. 4 or 5 tickers, 4 or 5 letters. All right. Moving along here, you're going to notice oil had a weak day, back below the 50-day moving average. That's good, right? We're all happy with that. Pull back in oil, hopefully some lower gas prices. In Florida, we're still over $4 here, so yikes. You look at gold, very much sideways, not a whole lot going on there. Bonds very active today, getting extended again. We had that TLT in our office trades. We'll probably come back to that. Maybe we'll do one tomorrow just to get a trade on there. But bonds hitting new lows, which means yields are hitting new record highs. So we're over 5% now on a 30-year, by the way. Wow. But home prices are still high. So think about that. There's all these things that you look at the market and say, I see weakness, meaning I see rates going higher. I see economic numbers moving against us here, but the market doesn't seem to care. The market does not move as quick as some of these data points. And remember, these data points, a lot of the economic numbers, they're not weekly numbers. They come out every quarter, once a month. Oil inventories comes out once a week, things like that. And so that was today, actually. And so you have time for this to be digested into the economy and the stock market, and people to go, wait a minute, now all this stuff that everybody knows now that I'm going to share with you, okay, now that it's hitting the market. Oh, it's too late then. You know, the market's moving lower. So you got to be careful there. Now, let's talk about mortgage delinquencies, because I get a lot of people saying, Dustin, moratorium's over, right? Foreclosures, I'm going to buy cheap property. Well, maybe, right? I mean, that's assuming that a lot of people are, in fact, behind on their mortgages. So you want to look at delinquencies. And I was doing this for a client here, and let's share this with you. Delinquencies as a whole are at, historic lows, right? Very, very few delinquencies there. But they just had their first month-over-month tick higher. It's early, right? That happens, but it's its first tick higher since last May. Other than that, we've been ticking lower or sideways, and over this last month, from February to March, we started ticking higher. I don't know if that's the beginning or not. The delinquency rate is now very low. It is 3.36%. The problem is they break it into 3 categories: newly delinquent, 60 days, and beyond 90 days delinquent. Newly delinquent mortgages are up 12% month over month. That's the most since during COVID. I understand during COVID, right, the people that didn't quite get to the moratorium. I understand that. I don't understand why now delinquencies are up 12%, right? Newly delinquent mortgage. People that were otherwise doing fine, and now for some reason they've become delinquent. Does it have anything to do with the moratorium coming off there? Now they have to make payments? I mean, the good news is your student loans aren't going to be due till August, but that's what you have. So that's a really high number, not to sound negative. So we're starting to see the impact of that overall. that could be a problem. And you could tell that people are already responding to that because what made new lows today? I'll get ahead of myself. Pulte Homes, right? You've got all the home builders, which is where it's the first place people think to go. So it's the first area that tends to get hit. Then they go into the mortgage servicers and things like that. But wow, okay, it's starting to get a little bit weaker out there. Now you know why. We'll keep up with those mortgage delinquencies so you can see. All right. So that's one part of it. And again, I'm not trying to sound negative here. I'm not trying to be down. I'm just trying to point out these econ numbers that as they get to extremes, well, then you'll hear about it, right? Then it'll be on TV. I want you to know about it. Now, I was looking through the jobs numbers and they look great, right? You saw that on Friday. Jobs numbers come out and are like, all right, best jobs ever, man. That's awesome. Well, we're adding back jobs, right? So that's a little bit of a misstep there. But I would do the same thing if I were Washington as well. You got 151 million people on a payroll. That's a good thing. It was a little bit short. It was short by 1.6 million. If you compare it to the same time in 2020, I'll give it a pass there because we're recovering. That's not a big number. I'm not too worried about that. And also the Great Resignation. How many of you guys can relate to that? People that have, I mean, I can tell you for sure that's happening. The clients that I've talked to that are like, I'm done. This is it. I'm going to go do something else. I'm just going to go hang out. I've saved enough. That's whatever. I don't need all this money. That's fine. So I get that. People have left the workforce when they're not coming back, at least as of now, right? They could change their mind, I guess. Now, the problem is what's pointed out here is transports, utilities, and trade, they have all recovered. So you take the jobs numbers, you break it down into little segments, transports, utilities, and trade. They've all fully recovered. The problem is if you look inside of that, it's all couriers, I'm not joking, and warehouse workers. There's nothing wrong with being a courier or a warehouse worker, but do you think a national economy can grow based on people delivering packages or shifting packages around, right? You can't grow an economy the size of ours with that. So it's not very high paying jobs. That means that money's not going to be able to be spent discretionary like you would expect more higher paying jobs to do. A quarter of the March payrolls, and I'll stop with all this in a second, a quarter of the March payrolls were leisure and hospitality. In other words, they were service businesses. Nothing wrong with doing that. It's very popular down here in Florida. Everyone that I know is somehow involved in that. But it cannot move an economy higher, right? It's good, but those two areas, which represent most of the strength in the job market right now, cannot move an economy higher. There's not enough money there. And the simple explanation is they make $1, but they probably make $1 less than somebody in management or, running a company or something. Therefore, that money has to be spent on necessities. It's less spent on discretionary money. And that's why it can't grow an economy. If you were making $10 for serving people food, just as to use an example, and you only need to spend $1, awesome. That can move an economy. You have $9 of discretionary spending. So that's a little bit of your economic lesson for the day. I'm not trying to be negative here. All I'm trying to do is say you have to respect the risk that's currently on the table in the market, right? That's all it is. So if we look at something like the S&P and you're thinking, I've got to get in, I've got to do this, just respect the risk that's currently on the table. That's all I really want to point. I can't tell you what to do there, but you know where things stand. All right, that was a little bit of a rant there. I'm going to move on because I do tend to ramble a little bit, and these things happen. If we go on over to office trades, I'll just share with you here real quick where we stand. Not much happened in terms of the movement of the account today. We did choose to close out our CME position. We closed out our LVS position. We closed out our UAL position, and I think we added. I forgot what we added there. These are all our current positions. We added Southern Co. They actually filled that order there. And we added AMAT as our plays. So just want to point that out. If you're in our office trade segment, something else you might learn is I went over how to set up a free scanner. So people say, well, Dustin, you got this scanner on here. I don't use that platform. I don't want to use that platform. How do I get the same thing? So we went through the very basics of starting how to set up a scanner for free. I showed you all the settings and everything, so you can check that out in our research site. We did not get filled on our JB Hunt. I did not expect to. And that's it. Everything else got filled today. So that was pretty cool. We got a lot done today. All right, going over to new highs and new lows. Ta-da, there were 39 new highs, 22 new lows. Walmart, impressive, right? I was looking at that yesterday. I liked that it reversed today. It said, no, I don't care what you think. went higher. I like that it's getting more extended now. This could be one for looking in our office trade segment there, because that is getting overextended. Eli Lilly broke out to new highs here. Very strong. It's in the healthcare space. You know the healthcare space is strong. You know there's other participants there because every stock in the category was strong. Moderna was the only one. Moderna, I'll say Algen, and if you're really going to get down there, IDEX was another one. Not positive today, but other than that, everything else was strong. All right, so impressive there. If you look over towards WEC Energy, also hitting new highs, getting extended. There's a lot of these in this space that are getting extended. Entergy is another one. ETR is a ticker symbol. They're making new highs, but they're extended. On the new low side, you got Pulte Homes and basically pick your home builder there. That's what you have going on with those. And Market Access. I'd just like to point out with Market Access, I can't tell you anything other than the stats here, but Market Access is now, in geeky terms, it's even off the chart. You can't see it down there. It is officially just over 3 standard deviations away from its 50-day moving average, or the blue line. That's geek talk for saying it's fallen a little bit further than it normally falls. That's all I'm saying. And it did it faster than it normally does. Well, anyways, when Market Access is over 3 standard deviations away from its 50-day, it has in fact never been a loser over a 5-day period. I'm not saying this time's different. I'm just saying 100% of the times when it is over 3% in 3 standard deviations away from the 50-day, it has been positive 5 days from now. That's it. I'm not telling you what to do with it, but I really like stats like that. So I just kind of following up with that. So we're going to talk about that on the office trades. What else do we have? Let's go stocks in the news, and then I'll get out of your way because I did a little extra rambling today, which some of you say you like, some of you say, what are you doing, man? So we'll just move on. Bank of America says, whether you're vaccinated or not, you're coming back to work on June 1st, right? We don't care. So that's Bank of America. Expect others to follow. Intel, a little bit lower on the day. I think you see that one start to bleed off a little bit more. They've stopped all business in Russia. It's basically just officially stopping it. They're not talking about it. They're not thinking about it. They actually did. Twitter's in the news because they say, oh, you know what? We've already been working on an edit button. Elon Musk wants an edit button. We've already been working on it. We're going to start testing it in the months ahead. Seems a little weird. Doesn't sound like something they've been working on. Tilray. The goofy stocks here. We haven't talked about these in a while because they were a joke. They got you excited. Everybody wanted pot stocks and it just sort of faded away because they're not making any money. Tilray is one of the leaders in the space if you're interested in those kind of things, but it did have a decent day today, up 3% because Tilray had earnings better than expected, and they turned a profit, right? So they made money per share. They made 9 cents a share if you're interested. And then you have Path. UiPath's a AI company. I forget where they're from. Germany, maybe? Or maybe Israel. I forget where these guys are from. But ARK Investments is interesting for you. ARK Investments. So ARK Investments gets a lot of attention lately, of course. They've decided, we're gonna buy Path, right? We're gonna buy $20 million worth of this company. They do $800 million in sales and they lose $600 million. So they bring in $800 million, they spend all $800 million plus another $600 million. So they're losing money. It's a growth company. These things happen there. Super duper growth firm in terms of what you're betting on here. So if it works out, it's going to be a huge home run. But ask yourself, what does a company like this do when they spend more than they're bringing in because they're trying to grow? So spend every dollar plus some. Where do they get the other dollars from? They have to borrow them, right? Do they get to borrow at super duper low rates right now? No, rates have gone up, remember? Part of what we talked about earlier there. So a little bit tough here. That's an aggressive investment. I won't say it's a bad one. It's one of those home run lottery ticket type trades that if this works, it'll be a huge gainer. It's over $50, no problem. But if interest rates stay high, there's no chance that this is going to be something that was worthwhile as an investment. So know your risk, again, when you're investing in things. Not saying the ARK Innovation Fund or any of those funds are bad. They're just super volatile. You got to be ready for that and know what you're stepping into. Okay, what else do we have? Oh, tomorrow we've got ConAgra reporting earnings, Constellation Brands. Both of them are sort of mostly miss in terms of how they perform on earnings day. And we've got natural gas inventories coming out. Couple changes in the S&P 600. GoGo, by the way, getting into the S&P 600. You know them? Have you ever been on a plane? You're going to pay for the internet? That's these guys. go in-flight internet, basically, is the gist of it, satellite internet. So for the moment, that stock is enjoying a nice little ride as it's going to be in the S&P 600. I'll take your questions now if you happen to have any, and then we'll get out of the way there. Yeah. We'll get out of the way. It's a really ugly chart. Yeah, that's a tough one there. You got to be willing to, what they say, catch a falling knife. Yeah, that's tough. The company sounds like the government. Sadly, there are a lot of companies right now that the only reason they're around, they lose money. You look up the number of companies that are public that currently lose money. It might shock you. But you can afford to do that when you can borrow for next to nothing and or sell shares. These guys can't sell shares so much because they're already beaten down. Twitter can sell shares if they want. They don't have to at the moment, but it's, you know, it's a risk. She's taking aggressive risks, and people are trying to judge her based on her few successful picks. Yeah, it's not easy to be that type of fund manager, so I won't pick on her. I mean, she put her head out there, or neck out there, as they say, but she could use a few home runs there. Yeah, and I wish her well, because she's technically our neighbor down here. So just aggressive. I just worry about people that buy the fund thinking, oh, it's going to perform great. Maybe, you know, and if it does, it's going to be amazing. You're going to be very excited. It's like a little firecracker. If it goes off, you're going to be very excited. But if it's a dud, you just lost. There's nothing. You can't light it back on fire. Yeah. I like it. XLU, you like that one? You want it to keep going up. So XLU is very extended. Any utility is very extended here. So I'd be very careful to suggest anything that now is the time that you should buy it. So I would... that's a tough one to say go for. I would actually never say that. Yeah. Do you think the student loan extension? Oh, looks like just got part of the question there. The student loan extension going to August, if you're asking. Ask the question, but it's higher than if you. Oh, I missed it. I'm sorry. Paste it again for me. I think we'll pull back a decent amount, or we chop around for most of the year. I said this before. I think that this year is a wide, choppy range. Because there's nothing coming up that could be so exciting that we have to go back to all-time highs and have another 20% year. And I'm not dissing the market. I'm just saying we need to take a break. So I think it would be welcome. Yep. Want some green in the market? Yeah. Do I like China? I'm assuming you're asking about the market over there. So very volatile here lately. I'll show you. Here's the FXIs, one way to look at a ETF here in the States to kind of track the markets there. Extremely volatile, especially this week. So this week has been up, down, and mixed, right? Today was kind of, overnight last night was kind of mixed. You could also use the A shares. I know a lot of people are looking at this because you got a discount there as well. But I don't have a reason to believe that this is a higher low and that it's going to just move on magically. I wish I did, but I just don't. Yep. See, you guys are just like the market. Everyone's question is, what is tomorrow going to be, right? I really don't know. I mean, I could guess that we saw weakness today. If I had to guess, I would say tomorrow's an attempt at a rally, and that's only because what moved the market lower, what we started with, Microsoft, Amazon, right? These have all now pulled themselves back. What's the matter with them trying to bounce tomorrow? If just a handful of them attempt even a small bounce, that'll be enough to give you a small little day in the market. Everything else has proven it wants to go along. So I think if you can get those 4 or 5 stocks to give you anything, then you got a recipe for a little bounce tomorrow. Do you now? Hey, Dustin, is Paychex lagging the market downturn along with stocks? Is Paychex lagging? You mean, is it? So I would say it's relatively strong compared to the market. Yes. So this is not one I would buy or chase. If I owned it, I'd say, okay, I'm going to take something. I have to take some kind of profit here. It's overextended as a short-term trader. But then you go, but leave it on my list, because if it pulls back, I already know that I have a stock that's stronger than the market at the moment. That could change, but if not, then I want to look at maybe doing something with a pullback. Yeah. Tom, you sitting on some cash too? Well, so it depends on what your strategy is, Tom. So if you are saying, I'm in cash, some form of cash, because I am a large cap investor or small cap investor or whatever it is. That's just what I have at the moment. Then you're looking specifically there. Don't you want your discount like you're getting here a little bit in large caps? I'm a dividend investor. So if you said that, you go, okay, I'm just looking for dividend stocks to give me a new entry opportunity. Don't worry about, you see how the market can be down, but everything else can be up. So if you're a healthcare investor right now, you're not looking to do anything. You're just happy, right? But the market's going down. So there's no criteria for them to use the market to make a determination about putting new cash to work. Good to when is Outreach going to have their IPO? I do not know. Could home mortgage delinquencies be from people being fired for not getting the jab? I guess so. Yeah, I mean, I don't know that that's actually tracked. It might be, you know. I've never looked into that, but I mean, I guess very well could be. At least some small, tiny piece of it. But that kind of, I don't know how the rest of the world went, but in Florida, that's not a thing. So I'm sort of immune to that drama. We don't get to see that down here. I don't know if that's good or bad, but I'm kind of enjoying it. UBXY is good to buy, hold, and keep selling calls weekly. No, you don't want to use a leveraged ETF for that without making this a hard, long, drawn-out thing. If Costco has a higher PE than Apple, does that make Costco a long-duration stock? Hopefully, you've already got it. So Costco, one of the killers out there, through everything, right? I get it through COVID and everything, but even after, that's a killer. I mean, Costco's been great. They've paid one-time dividends of $10 out of nowhere. That's a beast. I would not want to be betting against Costco, and if I was, I would probably, get out the second it fell, because that one has been ripping. I know. Oh, you're welcome. Is the new guy old enough to drive the dough cart? Why, does he look young? Yeah, he's basically the same age as me, right? We're 36 maybe? I'll give you a hint. His birthday is on the 14th coming up. He didn't want to tell anybody. His birthday's on the 14th, and I think he's going to be 36 or 37. Yeah, but he could drive the dough cart. We haven't let him yet. You know what I mean? You don't just get to show up and drive the dough cart. You got to earn that. Yeah. JBL, does Dustin swing trade? Not for our company, right? So we're long-term investors for retirement accounts and all that great stuff. But we realize a lot of people do shorter-term trades. So we do something called office trades. On Monday, Wednesday, and Friday, we just stream live in our client portal. And I do a lot of swing trades in there, a lot of option trades. And I just show you everything like I showed a minute ago. So you can just see, how's it going? You want to participate, you want to learn a little bit. We can do that, and we do that. But that's just kind of our fun, call it office trades, because we're usually just having lunch and sitting around trading, taking a little break from the normal stuff. Yep. Okay, thank you, Matt. You're the second person today to do that. You know what? Eric's fired, man. All right. I'm going to get out of here before that gets even worse, man. Dustin, you got a face for radio, bud. I know. It's what I've been given. All right, enjoy the rest of your day. I appreciate you guys hanging out with us, and we'll be back tomorrow. So we're actually going to do this tomorrow because it's going to rain pretty bad here, so we won't be able to go to the air show like we wanted to. So we'll do the closing beat in some form or another, and have a great rest of your day.